I think the ETF question is a particularly interesting one because, I came from a traditional sort of LP limited partnership structure experience. And I was looking around for, what is the best product for the investor? And unambiguously, ETFs are the best structure for the investor. And the reason why that is because they're essentially a tax loophole. They're liquid, they're transparent, and essentially a tax loophole, because what it allows you to do is it allows you under the hood of the ETF, from the investor's perspective, you buy an ETF, right? It's got a ticker. It looks like a stock. If you hold it for more than a year, typically you only pay capital gains tax at the time of sale. But under the hood in the ETF, there could be all sorts of different transactions. And what the ETF allows you to do is to essentially wash what would otherwise be short-term and long-term taxable gains using something called custom create redeems, which basically allows the operator of the ETF to reset the cost basis of the underlying securities in the product. And what that means is that you can rebalance between assets. Like if you rebalance between stocks and bonds in your personal account and you still sell stocks when they've had a gain, then you have to you have a taxable event.
Tax consequences. Yeah.
Right. You have tax consequences. The beautiful thing about an ETF is you can essentially do that in the ETF wrapper without any tax consequences. So maintain the
on the back end. So that's kind of what
that's right.
Got it. Okay.
That's right. And so, I mean, look, ETF nerds, we could do another podcast on the nerdy aspects of the ETF. But the basic point is that it's a tax loophole. And it's a better structure for the investor because you have the ability to sell the asset on the secondary market whenever you want, right?
Very liquid. It's
totally liquid, intraday liquid. These markets, particularly now, like over the last 5 or 10 years, they've really deepened. Like NASDAQ, NYSE, like something like a third of their income, a third of the business of NYSE is in ETFs. So they have huge commitments to make sure these products are sold and transacted super efficiently. And they've done a lot of work to do that. And in addition, actually, in the ETF wrapper, there was a bunch of regulatory changes that occurred right around COVID. So people kind of didn't even pay attention to them, which actually now allows you to run pretty sophisticated strategies in the ETF wrapper. As long as you maintain what I'd call institutional quality risk controls, which you should have anyway if you're running an active strategy. And so actually, I think what we're going to see is we're going to see a lot more active managers bringing sophisticated investment strategies in that ETF wrapper. And the great thing about it is everyone can buy it, right? And you can buy it. You can go buy an ETF with $10, right? That's the incredible thing about it. You can have $10 or $10 million, and you both have equal access to the same.
You don't have to be an accredited investor.
You don't have to be an accredited investor. You don't have to, you don't have to have a huge account. You can go on Robinhood and buy these things, or public.com or whatever. You can go and buy them, on your phone at whatever size is appropriate for you, which I think is great. It's totally talk about democratizing, financial assets like that. That is an incredible democratization.